Hello friends, hi, very good morning to all of you. I hope you guys have solved the questions of marginal costing that I discussed in last two sessions, and hopefully you are most of clear about the concepts of marginal costing. Now today we are starting with a fresh chapter, that is budgetary control, a very easy chapter and important chapter from examination point of view. Without wasting time, let's start with budgetary control. Again, I'll be addressing all your queries throughout the session. So if you have any queries, you guys can raise the queries. If the time permits, in last 15 minutes of the session, I'll try to discuss few doubts of marginal costing that you guys have solved. So let's start with budgetary control. Now, what is budgetary control? First of all, we'll discuss what is budget, and then we will discuss what is control. So what is budget? In simple terms, a merry paperwork, a estimation, prediction. That is what budget is. What it is? In simple term, it is estimation or prediction in form of paperwork about the work to be done. What it is? It is some sort of estimation or prediction in the form of paperwork. Nothing is real in this. It's only prediction. The real will be able to know after the actual results. But before doing anything, what we do is we do some sort of prediction, estimation, some sort of paperwork about the work to be done. That is what the budget is. Let's say, suppose I want to, I want to construct my house. What I will do? I'll call the contractor and will tell him that, boss, give me a prediction, give me an estimate, give me a budget that how much the cost I have to incur to construct a two-story house. Now what he will do? He will say that this much amount of material will be required, this much amount of labor will be required, this much amount of overheads will be required. Now this will be the some sort about my management cost. So approx he gave me a target of say 25 to 27 lakh rupees as budget. So this is what? Is this the actual figure? I mean, is this the actual figure that will? I mean, my house will be constructed for 25 lakh? No, the cost. The cost. The actual cost may vary from the budget. This is what the estimated figure is. Suppose you go to let's say a mobile shop. What he will ask you, sir, what is the budget? You say, suppose, sir, 25 to 28,000. Now, when the actual phone is purchased, will it be of 25 to 28,000? No, it might be 24,500 or 28,500, whatever it is. So, this is simply a paperwork, the prediction. This is the prediction of the work to be done. I hope this part is clear. Now, if you guys want to copy this part, you guys can copy. Vaishnavi, I'll address all your doubts. Don't worry, Vaishnavi. Now, in simple terms, keep the things very simple. In very simple terms, why we do business? Why do we open big houses of business or big shops? Why we invest money? In simple terms, our major motto is profit. Now this profit is completely dependent upon the sales budget. So what is sales budget? The parent budget of all the budget. Everything, each and every budget is dependent upon sales budget. Each and every budget is dependent upon the sales budget. What is sales budget? We can say in simple terms, the parent budget of all the budgets. Everything is dependent upon sales. Everything, each and everything is dependent upon sales. The parent budget is the what is basically the sales budget? The parent budget of all the. Let's say I want to make sale, or suppose if I manufacture two products A and B, my first target will be that how much units I can sell in the market. If I'm able to figure out how much unit I can sell in the market, then only I'll produce some units. I hope it is clear. I repeat again, if I'm able to predict after the necessary market study, if I'm able to predict that how much estimated units I can sell in the market. So once I got that estimated part, then only I will be producing that much of units. So everything is dependent upon the sales budget. Now, once it is confirmed that estimated we can approx on an average we can sell 10 to 12,000 units each product. Now what will be the next step? To produce those units. So once the sales budget is finalized, what we will do? We'll prepare production budget. That is, if we are able to sell after the necessary market research, if we are able to sell say 10 to 12,000 units of every product, say A and B, then what we will do? We will manufacture those products. For manufacturing, we will prepare production. Again, production budget has many elements. Material, labor, suppose let's take a very basic example of a sweet shop. Now, at the time of Diwali, there is a huge demand of sweets all over India. Now, suppose Mr. X is the shopkeeper of a very big shop, let's say based in Mumbai. Now, what he will do, depending upon the past data, the past market demand, current market scenario, what he will do? He will first of all predict the sales. That approx how much kgs I'll be selling in this on this Diwali occasion. Let's say he predict that I'll be able to sell 10,000 kgs of sweets this Diwali. Now, after predicting that the sales figures, what he will do? He will start doing production depending upon these figures. Now, production are based on various items, material, labor, and overheads. Now, material budget. How much quantity is to be purchased for producing these 10,000? At what price these quantities are to be purchased for producing this output? Further, at what time it should be purchased? So these are the key things. What to purchase, when to purchase, and to purchase at competitive price. So this is what we do in material budget. If there is anything wrong in the prediction of material budget, definitely we are going to suffer losses. Suppose if a product, which can be readily sold in the market, which is to be readily sold in the market because it is of perishable nature. If we purchase that material 10 days before the production, definitely it will get scrapped. It will get spoiled. So when to purchase, what to purchase, and at what price it should be purchased. So everything should be predicted with the help of material budget. Again, labor budget. Suppose since it is Diwali time, most of the labor, that is the we can say the halwais, will be busy in preparing sweets. So we have to make the effective time management, that at what time these people are available, the labor are available to make the sweets. Again, there are many elements involved in overhead management. So all these budgets depends upon the sales budget. That if our sales prediction is wrong, everything will go wrong. So the key is the sales budget. Production budget, material budget, labor budget, and overhead. Now, very important thing. Very, very important thing. For effective completion of these budget, we need funds. We need funds. We need money. For this, we have to predict the inflow and outflow for cash. So we have to prepare cash budget also. No project will be successful, no activity will be successful without proper prediction of cash. I mean, without proper prediction of cash budget. So we have to prepare cash budget also, because everything, whether it is production, whether it is production budget, sales budget, everything depends upon the funds we have. If we are not being able to manage the funds, no activity will be completed at a proper time and effectively. So we have to prepare cash budget also. Now, so sales budget, production budget, material budget, labor budget, overhead budget, all these of all these budgets, we do prepare a cash budget, that how to manage the funds. Now see, all these budgets can be prepared in two ways: fixed budget and flexible budget. All these budgets can be prepared in two ways: fixed budget and flexible budget. Now fixed budget. If the budget is prepared for a particular level of activity, then it is fixed budget. Say suppose I am estimating the sales of 10,000 units. So I'll be producing 10,000 units. The material, labor and overheads will be incurred as per 10,000 units. So for a fixed level of activity, let's say 10,000 units, we prepare fixed budget. So fixed budget is prepared for a fixed level of activity. Only a single level of activity. Now what about flexible budget? It gives some liberty. Let's say, suppose my fixed budget is say for 10,000 units. Now what in case 10,000 kgs of material, let's say. Now what if in case the sales is less? How much cost is to be incurred? Let's say 9,000 units. If I'm producing 9,000 units, what will be the cost? If I'm producing 12,000 units also, what will be the cost? So flexible budget gives us some sort of liberty. I repeat again, flexible budget gives us some sort of liberty that we can, prepare the budget at various level of activities or production levels. So if you guys want to copy, you guys can copy this part. Now there are few queries. There are queries raised by the students that, sir, what is the difference between budget and standard? Correct? Now, typically budget refers to companies' revenue, cost, whereas standard refers to per unit of cost. That is, it may be either material, it may be item labor or whatever. So when we are talking about the overall revenue, that overall sales to be made, overall material to be purchased, overall labor cost to be incurred, overall overheads to be incurred, we talk about budget. When what about standard? When the per unit cost is fixed, let's say material, labor, then we talk about standard. So what is basically budget? A budget usually refers to a department or a company's revenue, cost, or expenses in aggregate. Whereas in case of standard, it refers to projected amount. What it is? It is a projected, again, projected company's revenue. All these are projection only. Projected per unit cost. It may be of material, it may be of labor, it may be of overheads also. So now, I hope your part is clear. Budget, what is budget cost? That is projected budget. We prepare projected budget of companies, revenues, cost and all in aggregate. Whereas standard cost refers to the per unit projected cost. Now, I hope it is clear what is the sales budget, what is the utility of sales budget, then production budget, then material budget, then labor budget is there, then overheads budget is there. Then to manage everything we need cash. So cash budget is prepared. Then all these budgets can be prepared in two parts, fixed budget and flexible budget. Fixed budget for only one level of activity. Flexible budget for two or more than two levels of activities. So flexible budget gives us little liberty. Now, from examination point of view, in most of the cases, in most of times, three types of budget are asked. Flexible budget, production budget, master budget, and sometimes in rare cases cash budget also. It is covered in financial management. This cash budget is covered in financial management, but we will be discussing, I'll be giving you a briefing of cash budget also. From my perspective, it is very important. So let's start. Let's start with flexible budget. Again, I repeat, the chapter is very simple. So guys, please focus what I am teaching. So let's start with flexible budget. Again, I repeat, from examination perspective and even from the study material perspective also, only few budgets are covered. The most important budget is flexible budget, then production budget, then master budget is there, and then the last but not least cash budget is there. Because in few attempts they have asked questions on cash budget also, which is covered in financial management. So guys, let's start. I have provided you guys the question set, because in this session I'll be taking few questions. I'll be taking few questions from, not from study material, but from somewhere else. So guys, I suggest you guys to download the material what I have provided. The first question is of study material only, guys, so not to worry. But the remaining questions will be from some, are not from study material. So I suggest you guys to please download the material I have provided. Now the first question I am discussing is, a factory which expects to operate at 7,000 hours, that is at 70% level of activity, furnishes details of expenses as under. The variable expenses are given, the semi-variable expenses are given, the fixed expenses are given. The semi-variable expenses go up by 10% between 85 to 95% activity and by 20% above 95% capacity. Now, before starting with this question, let me discuss what we generally do in flexible budget. Now, suppose at 60% level of capacity, I am producing 6,000 units. I repeat again, at 60% level of capacity, I am producing 6,000 units. Let's say my variable cost is, say, 1,20,000 rupees. Now, how the questions asked, what exactly the question required from us? that prepare budget at 80% capacity and 100%. That is at different level of activities. So if we are producing 6,000 units at 60% capacity, how much will be at 80% capacity? Very simple, 8,000 units. How much units will be at 100% capacity? 10,000 units. So this is the data as is given in the question. That is at 60% capacity, we are producing 6,000 units and the variable cost in aggregate is say 1,20,000. Now the question is asking that you guys have to prepare the budget at 80% capacity and 10 that is 100% capacity. So at 60% capacity, if we are producing 6,000 units, then at 80% capacity we will be producing very simple 8,000 units. At 100% capacity, we will be producing 10,000 units. Now, the variable cost is 1,20,000 at 6,000 capacity. So, how much it will be at 8,000 capacity? Very simple. As I discussed, what is variable cost? The cost that varies according to production. So at 60% capacity, it is 1,20,000. So at 80% capacity, it will be how much? 1,20,000 is at 60% capacity. So how much will be at 80% capacity? Very simple. 1,60,000. Similarly, at 100% capacity, it will be. So as the production increases, the variable cost increases. As it decreases, it decreases. Another example, let's say, suppose variable cost per unit is given. Variable cost per unit is given rupees 5 per unit. Correct? So what will be the variable cost at 60% capacity? 6,000 into 5. 3,000. 8,000 into 5. 40,000. 10,000 into 5. So, if the variable cost is given in number, we can do simply cross multiplication and either decrease the cost or increase the cost in proportion of the production increasing or decreasing. And if it is per unit given, very simple, 6,000 into 5, 8,000 into 5, 10,000 into 5. Now, about fixed cost. As I discussed, that what is fixed cost? The cost that remain fixed irrespective of the number of units produced. Very simple. The cost that remain fixed irrespective of production. So suppose at this level, at 60% capacity, my fixed cost is 5 lakh rupees. Now at 80% capacity also it will be 5 lakh. And at 100% capacity also it will be. I hope this part is clear. Now my question is, what in case, very important part, what in case if fixed cost per unit is given? Fixed cost per unit is given. I repeat again, what in case if fixed cost per unit is given? Edwin sir? Edwin sir? Edwin sir? Let me check guys about the question whether they are uploaded or not. Just give me a minute. Just a second, guys. Let me check. Sorry. Now see, guys, as I told you here in the question, let's say fixed cost per unit is given, that is rupees 10. Fixed cost given is rupees, per unit is rupees 10. Now as I told you guys that fixed cost remain constant at all the level of sales. We can't do like that. 6,000 into 10, 60,000, 8,000 into 10, 80,000, 10,000 into 10, 1 lakh. It is not possible because it is not variable cost. It is fixed cost. We have to keep it constant at all the level of sales. Now what to do? How to calculate fixed cost? Whether we have to multiply it by 100% capacity or 80% the average capacity or 60% the given capacity. Very important point, guys. Fixed cost is always calculated at normal capacity, the capacity which is given in the question. I repeat again, fixed cost is always calculated at fixed cost is always calculated at normal capacity, that is given capacity. So I repeat again, how to calculate the fixed cost? Fixed cost is calculated at normal capacity or given capacity. Now the given capacity is the normal capacity 6,000. So 6,000 into 10, 60,000. Here also the same 60,000. And here also it will be same 60,000. I hope this part is clear, guys. So I repeat again, variable cost varies according to production. As and when the production is increasing, variable cost will increase. And accordingly, if 1,20,000 is the cost at if 1,20,000 is the cost at 60% capacity, then at 80% capacity it will be 1,60,000. At 100% capacity it will be 2 lakh. So as the production is increasing, the variable cost is also increasing. Now suppose the variable cost per unit is given is, let's say, rupees 5. I repeat again, the variable cost per unit is given, let's say, rupees 5. So at 6,000 units, 6,000 into 5, 30,000. At 8,000 units, 8,000 into 5, 40,000. At 10,000 unit into 5, 50,000. So this is all what about variable cost. Now fixed cost remain fixed at all the level of sales. So suppose at 60% capacity, the given capacity is given as 5 lakh. So at this capacity also, that is 80% capacity also, it will be 5 lakh. At 100% capacity also, it will remain same, that is 5 lakh. I repeat again, one more point, very important point. If the fixed cost is given in the question is per unit. I repeat again, if in question the fixed cost given is rupees per unit, then how to calculate? Do remember this point. Fixed cost is always calculated at normal capacity, that is given capacity. Now here in the question, given capacity is 6,000 units. So 6,000 into 10, 60,000. 6,000 into 60,000, then 60,000, then 60,000. So this part is done, guys. So this is more or less what we will be doing in flexible budget, distributing all the overheads in two parts, fixed and variable. Now let's say if semi-variable overheads are also given. I repeat again, if semi-variable overheads are also given, no problem. Variable overhead, semi-variable overhead. Semi-variable overhead, two parts, variable and fixed, and the last will be fixed. I repeat again, if the three categories are given, variable overhead, semi-variable overhead and fixed overhead. So first we will write all the variable overhead like that. Then the second heading will be semi-variable overhead. In semi-variable overhead, it will be divided in two parts, variable and fixed, and then fixed overhead. So you have to follow the instruction as given in the question. So if you guys want to copy this part, you guys can copy for your for future reference. Please copy this part. Sakshi Gupta, I have clearly mentioned that fixed cost is always calculated at normal capacity. That is the given capacity. The capacity as given in the question. So in this question, I have taken the capacity given is at 60% capacity, 6,000 units. So this we will assume as the normal capacity. I'm checking that whether the questions is uploaded or not. Let me check. Give me a minute time. So I hope you guys have copied the solution. Now, in a minute or two, the presentation will be available. In the meanwhile, I'll be discussing the first illustration of study material. So guys, please take out your study material. I'll be discussing the first illustration of your study material. Thereafter, the study material will be available in a minute or two. Don't worry, guys. So hopefully you guys have copied. Let's start with illustration number 1. A factory which expects to operate 7,000 hours, that is at 70% level of activity, furnishes details of expenses as under. Variable expenses, semi-variable expenses and fixed expenses. That is 1800 is the given as fixed expenses. The semi-variable expenses go up by 10% between 85 to 95% activity. and by 20% above 95% activity. Prepare a flexible budget at 80%, 90% and 100% activity. Very simple question. As discussed, we'll prepare flexible budget. %70 capacity is given. Now the question is asking to prepare budget at 80, 90 and 100% activity. 80%, 90% and 100% activity. At 70% capacity, we have hours given 7,000 hours. So, at 80% capacity, it will be 8,000 hours. At 90% capacity, it will be 9,000 hours. At 100% capacity, it will be 10,000 hours. Now, as given variable expenses, as given in the question, variable expenses is 1260. 1260 at 70% capacity. So at 80% capacity, it will be 1440. At 70% capacity, it is 1260. So 1260 divided by 70 into 80, 1440. So therefore, at 90% capacity, it will be 1620. At 100% capacity, it will be 1800. I hope it is clear. I repeat again, 1260 at 70, so at 100% capacity. So done with the variable expenses. Now semi-variable expenses. Now in this question, the semi-variable expenses is given and the breakup is not given, that is how much is fixed and how much is variable. However, they are clearly mentioning in the question that the semi-variable expenses go up by 10% between 85 to 95 and by 20% above 95. So between 85% to 95%, it will go up by 10%. And above 95%, it will go up by 20%. So 70%, it is 1200. It is going up by 10% between 85 to 95, but here it is given 80% only. Then since nothing is given, we'll write it 1200 only. Now between 85 to 90%, 90% come in between. So between 85 to 95%, it is increased by 10%. So 1200 plus 10%. 1320 will be at 90%. Then again above 95%, that is here it is 100%. So it will go up by 20%. So plus 20%. It comes 144. So I hope it is clear. It is about semi-variable expenses. No need to do any sort of exercise because in question it is clearly mentioned that between 85 to 95% it is going up by 10% and above 95% it is going up by 20%. Now next, fixed cost. Fixed cost given is 1800 at 70% capacity. So at this capacity also it will be 1800, at this capacity also it will be 1800, and at this level of capacity also it will be. So now the hard work is done. 1260 plus 1200 plus 1800. 4260. 1440 plus 1200 plus 1800. Four seven four zero. So I hope this part is clear. Variable expenses as discussed will increase as per the production is increasing. Semi-variable expenses, in this question we are following the instruction as given in the question, and as discussed fixed cost remain fixed at all the level of sales. So this is the way we have to prepare flexible budget. If you guys want to copy, please copy this part. Sakshi Gupta, hopefully your doubt is cleared. That sir, in question, if the normal capacity is not given, but the per unit cost is given, then how we examine which is normal capacity? The given data. Suppose if the data is given at 6000 capacity, then 6000 capacity will be the normal capacity. Guys, hopefully the study material has been uploaded. You guys can please check. Yes, Priyanshu, it's up to you. You can calculate it on percentage basis also or units basis also. Similarly, in this case also, suppose 1260 is at 70%. So divided by 70 into 80. Again, you will get the same answer only. So it's up to you, dear. You can calculate it on unit basis or percentage basis, whatever it is. Payal Sharma has the doubt that how the variable cost is calculated. See, Payal, 1260 at 70% capacity. So at 80% capacity will be 1260 whole divided by 70 into 80. Similarly, 1260 at 70% capacity, how much will be at 90% capacity? Like this. So 90. Similarly, here in the case, 1260 at 70% capacity, so how much will be at 90? So hopefully your doubt is clear. Yes, Mansha, it is clearly given in the question that above 95% it is increased by 20%. So we have to assume that it is from the normal capacity, Mansha. Please copy the solution. Sakshi Gupta, I mean, all these types of working, I mean, if it's up to you, you want to show or not. I mean, it's completely up to you. These are very easy working. So, I mean, if the question is of, less weightage in exam, better simply write the final answer. That is fine. Now, so I have discussed question number 1 of my study material. And the same question is also given in the material issued by ICAI. So hopefully this question is clear now. The flexible budget, what is flexible budget? The budget prepared at various level of activity. In this, costs are divided in 3 parts: variable cost, fixed cost, and variable cost, semi-variable cost, and fixed cost. Variable cost, the cost that varies according to production. As the production is increasing, variable cost will also increase. As the production is decreasing, variable cost will also decrease. Fixed cost, the cost that remain fixed at all the level of sales. So this is fixed cost. What about semi-variable cost? We have to follow the instructions as given in the question. But if in question the breakup is given of fixed and variable, then we'll show it in fixed and variable. Now let's start with the question number 2 of my study material. Draw up a flexible budget for overhead expenses on the basis of following data and determine the overhead rates at 70%, 80%, and 90% capacity. So you have to draw flexible budget. Please copy this part, guys, quick. I'm erasing the board now. I'm discussing question number 2 of my study material, guys. So draw up a flexible budget for overhead expenses on the basis of the following data and determine the overhead rate at 70%, 80%, and 90% capacity. Now all the variable overheads are given, that is indirect labor, stores including spares at 80% capacity. Semi-variable overheads are given, power and repair 30% is fixed and 70% is variable. Okay. Repairs is given at 60% is fixed and 40% is variable, and rest all are fixed overheads. And estimated direct labor hours are also given. No worries, a very easy question again. Question 2 of material, not of study material, guys. The data has been given at 80% capacity. We have to prepare the budget at 70 and 90% capacity. Now the variable overheads are given. Indirect labor is 24,000 and stores including spare is 8,000. Now since it is given clearly in question that it is variable cost, so that's why it is 24,000. At 80% capacity it is 24,000. So at 70% capacity it will be 21,000. At 90% capacity, 27,000. Another, stores including spares. Stores including spares. 8,000. At 80%, so at 70% it will be 7,000, and at 90% it will be 7,000. So this is what we call as total A, that is of all the variable costs. So 24 plus 8, 32. $36,000. Now next data is given in question is semi-variable. First one is power. Now fix, variable and fixed. The power is total 40,000, of which 70% is variable. So 28,000 is variable and 30% is fixed. So fixed cost will remain constant at all the level of sales. So it will remain fixed. Now 28,000 at 80%. So at 70% it will be 24,500. At 90% it will be 31,500. Similarly, repairs. Variable and fixed. The total repairs amounting to rupees 4,000, of which 60% is fixed. So 2,400 is fixed. 2,400 is fixed. So balance 1,600 is variable. So now fixed is 2,400. So 2,400 and 2,400 it will remain. Variable 1,600 is equals to 80%. So 70% will be 1,400. And at 90% it will be 1,800. Now all the fixed semi-variable costs are complete now. So 44,000, 40,000, 300, 47,700. So all the variable cost and the semi-variable cost is complete now. Let's start with the fixed cost, fixed overheads. Depreciation, insurance and salaries. Depreciation, insurance and salaries. It is 22,000 for depreciation. As discussed, fixed overhead will remain unchanged. 6,000 for and 20,000 for salaries. This is total C. So we are done with all the variable overhead, semi-variable overhead and fixed overhead. Since the space is less, I suggest you guys to copy this part. Most of the part is done. We have segregated all the overheads and we have calculated all the overheads. So please copy this part. I'll write the remaining solution thereafter. Please copy this part. Very good, Ashneet. Chandralekha, it has been uploaded, Chandralekha. So please check. So the total cost will be 32,000. That is A. Total semi-variable cost 44,000 plus 48,000 for C. 1,24,000. Next 28,000 plus 40,300 plus 48,000. 1,16,300. Similarly, 36,000 plus 47,700 plus 48,000. 1,31,000. I hope this part is clear, guys, and it is visible also. Please copy this part. So we have got the total cost. A plus B plus C, that is 1,24,000, 1,16,300 and 1,31,700. Now the question is asking you guys to calculate the drop of flexible budget and determine the overhead rates. So you have to calculate the overhead rates also. The R's is given in the question, that is 2,48,000 for 80% capacity. So for 70% capacity, $2,17,000. $2,79,000. So we can easily get the rate per hour. $0.5 in this case. $0.535, 0.536 in this case. $0.472 in this. So the question is complete, guys. Please copy this part. Thereafter, I'll be moving towards the next question. Question number 3, I'm starting a very good question and a very important question. So guys, please read question number 3 from my material. Question number 3. The monthly budget for manufacturing overhead of a concern for two level of activities are as follows. Now 60% capacity, the budgeted production is 600. At 100% capacity, the budgeted production is 1000. Wages is given, consumable stores is given, maintenance is given, power and fuel is given, depreciation is given. You are required to indicate which of the items are fixed, variable and semi-variable. Prepare a budget for 80% capacity. Now see, in the last two questions we discussed, there is only one level of activity given in question. In the previous question it was 80%, and before that it was somewhat 60 or 70%. But here in the given case, there are two levels of activities are given. Why? I mean, they can easily ask the question by giving only 60% and can say that prepare 80%. But why these two level of activity are given? That is a point of question. Because they are giving 60% capacity also and 100% capacity also. So there must be something in the question to consider, because else the question will not give useless data. So see, the capacity at 60% and 100% is given. The budgeted production is given 600 and 1000. Now what you are required to indicate, very important first point, which are fixed, which are variable and which are semi-variable. So very important, we have to identify that what all overheads are fixed, variable and semi-variable. So let's calculate it. Let's make a rough statement, rough working note. So let's start with wages first. Wages is 2400 at 60% capacity. So at 100% capacity, if to being a variable cost, for being a variable cost, so at 100% capacity, it should be 4000 at 100%. And in the question also, it is given 4000. So yes, it is a variable cost. What it is? A variable cost. Let's move toward the next part, that is consumable stores. At 60% capacity, it is 1800. At 100% capacity, it will be 3000. And here in the question also, it is written 3000. So it is also a no problem at all in these two. Now, maintenance cost is 2200. So at 100% capacity, it should be 3666. And in the question, it is given the maintenance cost is 3000 only. Not a variable cost, that is a semi-variable. Next, power and fuel. So 3200 at 60% capacity. So at 100% capacity, the power and fuel should be 5333. Whereas in the given case, it is given 4000. So again, it is not fixed also and not variable also. It is semi-variable. Because if it is variable, then the answer should be 53333. Whereas if it is fixed cost, then it should be 3200 for 60% and for 100% also it should be 1300. So it is not completely fixed, it is not completely variable, it is semi-variable. Depreciation 8000 and 8000, so it is fixed. Insurance 2000 and 2000, it is fixed. Now they are asking to prepare a budget for 80% capacity. So let's see how to prepare budget at 80% capacity. We have to prepare budget at 80% capacity. So the first is variable cost. That is wages. It is given 2400 at 60% capacity. So at 80% capacity it will be 2400 divided by 60 into 80. That is 32. Next is consumable stores. Again it is given 1800 at 60% capacity. So at 80% capacity 2400. The variable cost is done, wages and consumable, as we have calculated that wages and consumable are the only variable cost. So total. Now next, semi-variable cost. Now next, semi-variable in this first is maintenance cost. Maintenance cost, it is a semi-variable cost. How come semi-variable cost? I have already discussed. Now, can anyone suggest me or answer me that what is the fixed portion and what is the variable portion at 80% capacity? Can anyone answer what is the fixed portion and what is the variable portion at 80% capacity? Can you guys please calculate? I'm giving you 3 minutes time. Please try to solve it. If not also, then it is fine because it's a new concept. If you guys want to try, just try it once. I'm giving you 2 minutes, guys. Why it is variable, I have already discussed, because maintenance cost is 2200 at 60% capacity. So it should be somewhat, 36, 2200 at 60% capacity. So at 100% capacity, it should be 36667. But it is not 36667, but it is 3000 only. So it is not completely variable. Yeah, it is variable, but it is not completely variable. It is semi-variable. Something is fixed and something is variable. Can you guys please calculate? I'm waiting for your answers, guys. Just try it once. Be quick. I'm waiting for your answers, guys. I'm waiting for your answers, guys. Any answers? Got the answers of you. Very good, guys. Now see, I'll write the solution. Now see, maintenance cost. At 60% capacity, the maintenance cost is 2200. And at 80% capacity, it is 3000. Sorry, at 100% capacity, it is 3000. Units are also given at 60%, 600 units and 1000. Now, how to calculate variable cost and fixed cost? Very simple. Overall, the total cost is changing by 800 rupees. So, change in cost is how much? 800 rupees. Whereas change in units is how much? 400 rupees. So, how much is the variable cost per unit? Rupees per unit. Therefore, in 60% capacity, 600 units, we can divide it in two parts, variable cost and fixed cost. Variable cost is rupees 2 per unit, so 600 into 2, 1200. The total cost is 2200, therefore the fixed cost will be 1000. I hope this part is clear. Let me check the answers of few of you. Priya, your answer is correct. No, sorry. At 60% capacity, yes, it is 1200. So therefore, at 80% capacity, 800 units. Therefore, the variable cost will be 2 into 800, that is 1600. And as I told you, fixed cost remain fixed at all the level of sales. Therefore, it will be 1000. So here the fixed cost will be 1000 and variable cost will be 1600. So in aggregate, it will be 20. If you guys have any doubts, you can ask me for that. Benny has answered. One second. Question number. Janvi has solved the question completely. Vansha, sir, please clear my. Manshail, I'll address your query after completing this question. Wait. Most of you have got the answer. Some were correct, some were incorrect. Anyway, so this is the way. Suppose at 60% capacity, the cost is 2200. At 100% capacity, the cost is 3000. The units given is 6000, 1000. So, how much is the change in total cost? Very simple. Total the cost is increasing by 800, whereas the units are increasing by 400. So we can easily calculate the variable cost per unit, that is rupees 2 per unit. Therefore, at 60% capacity, 600 into 2, 1200 is the variable cost, and remaining the balance amount 1000 will be the fixed cost, because the total cost is 2200. So out of 2200, 1200 is the variable cost, the balance will be the fixed cost. So similarly, at 80% capacity, the fixed cost will remain same, but variable cost will be 800 into 2, that is 1600. Any of you guys can copy, I mean, any one of you who want to copy can copy this working note. I'll be erasing this part because I'll be requiring it for the next part. So please copy. Please copy this part. Again, few of you have solved power and fuel also. So very good, guys. Keep it up. I'm erasing this part now. Again, for power and fuel, at 60% capacity, 600 units. At 100% capacity, 1000 units. The cost is given of power and fuel is 3200 and 4000. 3200 and 4000. Now, again the same concept. Overall change in cost is how much? 800. Overall change in units is how much? By 400. So that will be the variable cost per unit, that is rupees 2. So now at 60% capacity, that is 600 units, where the total cost is rupees 3200 rupees. So 600 into 2, that is 1200 will be my variable cost, and balance will be my fixed cost, that is 3200 minus 1200, that is 2000. So at 80% capacity, the same concept, as we have already calculated the fixed cost, that is 2000 rupees. The variable cost at 80% capacity, that is 800 units, will be 800 into 2, that is 1600 rupees. So variable will be 1600, fixed cost will be 2. I hope you guys are now clear how to segregate fixed cost and variable cost and calculate the same. Very good, Vaishnavi. Very good, Ayushi. Very good, Saurav Gidwani. Mansha, I'll be addressing your queries after completing this question. So be patient. Have some patience, Mansha. So if you, please copy this part. Arun Prastha, the way to calculate maintenance cost and power fuel is more or less the same. Only the figures differ, so you can understand with the help of this presentation also. I hope, Arun, your doubt is clear. Please copy this part. Nancy has raised a query, sir. It can be power variable 100%. Very good, Sanjay. I'm erasing this part. Anyone you guys can, any one of you want to copy can copy. Please copy fast. Arun Prastha, hopefully your doubt is clear now. Mr. Arun. Now, the the variable and semi-variable part is done. Then now the fixed cost. It is given as depreciation and insurance. I think it is 2000 and 8,000 and 2,000. The total C is 10,000. So total cost at 80% capacity A plus B plus C. That is 10,000 plus 6,200 plus 5,600, 21,000. Very good, Sanjay. Your answer is correct. Very good, guys. Please copy the entire solution, guys. Very good, Sakshi. Yes, Ayushi, your answer is correct. Everyone, please copy this solution. Now, this is the main solution, and all these data I have already erased is a part of working note. You guys have to show the working note. While writing in exams, you have to show. The working note is must in this question. So I suggest you guys to first leave ample space for the solution and thereafter the working notes. Very good, Sakshi. Very good, Harisudha. Yes, Kajal, the chapter will be completed today. Don't worry. So I hope you guys are clear about flexible budget. What is flexible budget? The budget which gives us the estimate at various level of activity. That is, suppose at 60% capacity, 80% capacity, 100% capacity. In this flexible budget, we have discussed the basic questions also, and the question wherein the variable, semi-variable cost, calculation we have to make. That is the semi-variable question is, the semi-variable cost is given in the question. So illustration number 1, illustration number 2, illustration number 3 is over. Now let's proceed further with production budget. Please copy it fast. Now, production budget. What is production budget? Very simple. How much to produce? In what quantity to be produced? Before starting with production budget, I have a very small question for you guys. So I'm expecting the answer in a minute. Let's say, suppose you guys are the manufacturer of handmade chocolates. I repeat again, guys, you guys are the manufacturer of handmade chocolates on a particular day. On a particular day, at the start of the day, you have 20 chocolates in your stocks. Chocolates sold during the day is, say, let's say 160 chocolates you guys sold during the day. At the end of the day, 30 chocolates in stock. At the end of the day, you have 30 chocolates in stock. I repeat again, you started the day with 20 chocolates in your hand. At the end of the day, 160 chocolates were sold and 30 chocolates were still in stock. So you must have produced some chocolates during the day. Am I right or wrong? You must have produced some more chocolate, some or other chocolates, some chocolates on a particular day. So you guys tell me how much chocolates you produce. It's a very basic question. It's a very basic question you do in your day-to-day activities. Just tell me how many chocolates you have produced in a particular day. You guys tell me now. I'm waiting for your answer. I repeat again, at the start of day, you have 20 chocolates in your hand. At the end of the day, you just check the figure that you have sold 160 chocolates and still you have 30 chocolates in your hand. So you must have produced something during the day. So tell me how much chocolates you manufactured. Please answer. I've got one answer, that is 170 from Yogesh. It is incorrect. Sorry. Any other answers? 170, 170, 170, 150. 170 is the answer, 150 is the answer. I have got 11 also. Mansha, please check your answer. 11. Ayushi has answered 150. Guys, I am waiting for your answer, guys. I repeat again, chocolate at the start of the day were 20 chocolates. At the end of the day, when the actual data were ready, you saw that total approx 160 chocolates were sold during the day, and at the end of the day, you have still 30 chocolates in your hand. Now you tell me how much chocolate you produced. Still waiting for your answers, guys. Mansha, 110 chocolates. I've got one more answer, 110 chocolates. Any other answers, guys? Waiting for your answers. I repeat again, the chocolate at the beginning of the day were 20 chocolates in your hand. The chocolate sold were 170, 160 chocolates during the day. At the end of the day, you are still having 30 chocolates in your hand. So you must have produced something. You must have manufactured few chocolates. So how many chocolates you manufactured? Payal Sharma, 190. I've got one more answer, that is 190 chocolates. Any more answers, please? Anyone else? Okay, now see. 170 is the correct answer. All the answers are incorrect. Very simple. At the end of the day, you are having 30 chocolates. That is the closing stock. The sales during the year were how much? 160 chocolates. And the opening stocks was 20. Opening stock was 20. So at the end of the day, you produced 170 chocolates. Not that tough, it's very easy. 200, I still got one answer from a girl. 200, 150, 190. Guys, please check. This concept you have already studied in 11th, 12th, FY, SY, whatever it is. Closing stock, add sales, less opening stock is the purchased amount or the manufactured amount. So I hope this part is clear. So in production budget, what we generally do is very simple, very simple. What is production budget? That how many units to produce? So very simple concept. Sales, add, closing stock, less opening stock. Next. Produced, or you can say manufactured, or can say purchased, whatever it is. This is what the production budget is. How much units to produce, estimated sales, add closing stock, less opening stock. I hope it is clear now. What we are going to do in production budget: sales, add closing stock, less opening stock. This is what the production budget is. Nothing more than that. Total sales minus add closing stock less opening stock. Please copy this part. I'll be discussing questions. No worries, Mansha. That's okay. Please copy this. I'll be discussing the next question of my material. Question number 4 of my study material. Prepare a production budget for 3 months ending 31st March 2020 for a factory producing 4 products on the basis of the following information. A very easy question. Prepare a production budget for 3 months ending 31st March 2020 for a factory producing 4 products on the basis of the following information. Very easy question. So there are 4 products. We are preparing production budget. There are 4 products X, Y, Z and W. Particulars. The same format: sales, add, less, so the sales is 13,000, 16,000, 13, 16. Closing stock is opening stock is also given, that is 2,000, 4,000, 3,000 and 5,000. So units produced. Thirteen plus 3, 16, 16 minus. This is a very simple question of production budget, the basic production budget. This question is basically I covered in this study material to make you guys clear about what I want to discuss in production budget. So please copy, guys. Very good, guys. Aditya, Saket Das, very good, guys. Please copy this part, guys. Now, let's start with question number 5. The budgeted production. Hopefully this part is copied. I am erasing this part now. The production budget and the production budgeted production and production cost for the year ending 31st December are as follows. Of the previous year data is given. Total 2,20,000 units of X were produced. The direct material cost per unit was 12.5, wages were 4.5, total factory overheads that were variable is 6,60,000, and similar data is given for Y also. A company is manufacturing two products X and Y. A forecast about the number of units to be sold in the first 7 months is given below. Okay, January, February, March, April, May, June, July, August, all the data of the 7 month of product in XY is given relating to sales, that is the units sold is given. Okay, it is anticipated that there is no work in progress at the end of the month. Now, very important line, finished units equals to half. Finished units equals to half the sales of the next month will be in stock at the end of the each month, including the December of the previous month. Prepare 6 months ending 30th June a production budget and a summarized cost of production budget for the period of 6 months. Now, in this question, they are asking two things. First, you have to prepare the production budget of product X separately and product Y separately. Very important, I repeat again. You have to prepare the production budget of X and Y separately. And second thing, what you have to do is the summarized cost of production budget. That is the overall cost of production budget you have to calculate. Now, let's take 3 to 4 minutes break. I suggest you guys to prepare a production budget of product X. That's it. Nothing more than that. I'll be discussing this question. So I'm giving you 3-4 minutes. Even I need a break now. So let's take 3-4 minutes break and then we will resume and I'll be checking your answers on product X budget. Product X production budget. Okay. So let's take a break of 3 to 4 minutes. Admin sir. Admin sir. So let's take a break. I want the production budget of product X. I'm waiting for your answers, guys. Let's take a break. 2 minutes. Aditya Gupta has got the answer. Let me check, Aditya. I have to check. So to check, I have to solve it over board. I have to check Saket. Saket has also got the answer. Let me check Saket. So hi friends, let's start. I'm solving question number 5 now. I'll be starting with the production budget of product X, then product Y, and then I'll be preparing the summarized cost of production budget. So let's start with so for the 6 months, that is January, February, March, April, May, and June, we have to prepare the production budget only for 6 months, starting from January. That is January, February, March, April, May, and June. I hope this part is clear now. So now let's start. The same concept, sales, add, closing stock, less opening stock. Now the sales data is already given. That is for the product X, 10,000, 12,000, 16,000, 10,000, 12,000, 16,000, 20,000, 24,000, and 24,000. Right? 24,000 and 24,000. Now the question is saying that finished stock equals to half the sales of the next month will be in the stock at the end of each month. So suppose for February the sales is 12,000. So half of February sales, that is 6,000, will be the closing stock of January. I repeat again, I'm writing the explanation here. Half of sales of February, that is 12,000 divided by 2, 6,000, will be the closing stock of January, and so on. So what will be the closing stock of January? Very simple, 6,000. What will be the closing stock of February? Half of 16,000, like that. What will be the closing stock of April? 10,000. Sorry, March. What will be the closing stock of April? 12,000. What about May? Again 12,000. And July figures is 20,000. So therefore it will. I hope this part is clear. Now the closing stock of January is 6,000. So it will be the opening stock of February. Closing stock of January will be the opening stock of February. Similarly, closing stock of February will be the opening stock of March. Closing stock of March will be the opening stock of April. Closing stock of April will be the opening stock of May. And closing stock of May will be the opening stock of. Now, what about the opening stock of January? Opening stock of January will be the closing stock of December. And closing stock of December will be the half the sales of January. I repeat again, what will be the closing opening stock of January? The closing stock of December. And what will be the closing stock of December? Half of the sales of January. So therefore, half of the sales of January is the production budget is ready now. So 10 plus 6, 16 minus 5, 11,000. 20 minus 6, 14,000. 26 minus 8, 18,000. 22,000. 24,000 and 20. So the total production will be total production will be 1,11,000. I hope this part is clear, guys. The total production of X will be 1,11,000. Let me check how many of you have solved the question. 11, 14, 18, 24, 22. Very good, Naina Mantri. Satish, please check your answer. 14, 18, 22, 14. Very good, Mansha. Satish, please check your answer. Hari Sudha, very good. It is not 34, Saket, it is 24. There are some corrections needed. Saket Das, please check your answer. So this part is done. Half of the sales of February, that is 12,000, divided by 2, that is 6,000, will be the closing stock. January. If you want, you guys can copy this line. I'll be erasing this part. Then I'll be solving production budget of product X. So now I'll be calculating production budget of product Y for 6 months. Again, the same way. January, February, March, April, May, and June. Again, the same sales, add closing stock, less opening stock. I have got the sales. Vaishnavi Jamwal has solved of Y also. Let me check the answer, Vaishnavi. So for product Y, January it is 28,000 sales. February it is again 28. March is 24,000. April is 20,000. May is 16,000. And June is 16,000 again. Now, half of sales of February will be the closing stock of January, so 14,000. Similarly here 12,000, 10,000, 8,000, 8,000, and half of the sales of July, that is 18,000, so half is 9,000, so 9,000. Half of the sales of July. Half of less opening stock. So the closing of stock of January will be the opening stock of February, therefore 14,000, 12,000. Closing stock of March will be opening stock of April, so 10,000. Similarly, 8,000 and 8,000. For January, the opening stock will be closing stock of December, and December closing stock will be half of the sales of January. So half of the sales of January is 14. So the production budget is ready now. We have to simply make the total. So 28,000. 28 plus 12, 40 minus 15. 26,000. 22,000. 18,000. 16,000. And 17,000. So the total production will be 28,000 plus 26,000 plus 22,000 plus 18,000 plus 16,000 plus 17,000. It comes 1,27,000. So the total production is ready now. Please copy this part. Please copy this part because I'll be needing some more space for calculating the cost. So production budget of X and Y is ready. Please copy, guys. Vaishnavi, your answer is 128 and my answer is 127,000 units. Please check, Vaishnavi. Please copy. Very good, Satish. Your answer is correct. Ashneet Kaur Johar from Lucknow. Your answer is correct. Abhilasha Singh, you have to calculate the production for each and every month separately. Because they are clearly asking you in the question that you have to prepare production budget for first 6 months. Good, Vaishnavi. Sanjay, please check your answers. Janvi has also calculated the cost of production. Let me check. I'll be solving the question now. All of you, please copy the solution and presentation. No problem, Vaishnavi. All of you, please copy this presentation. Very good, Sakshi. Now let's prepare a statement of cost of production. Let's prepare a statement of cost of production. Those who have not copied, please take the screenshot. The time is running now. We have limited time, guys. I have to discuss one more question on master budget. And if the time permits, I also want to explain you guys few things about cash budget also. So now, we have got the answers, that is 1,27,000 and 1,11,000. X 1,11,000, and for Y it is 1,27,000. So let's prepare a statement showing the cost of production. Now material is given, rate is given in the question, that is 12.5 per unit. So 12.5 into 1,11,000, 13,87,500 for X. And for Y the rate is given 19 into 1,27,000. So 24,13,000. Labor cost 4.5 per unit. So 1,11,000 into 4.5, that is 4,99,500. And for Y it is 7 into 1,27,000, that is 8,89,000. The last part, variable over factory overhead for each type of product, variable factory overhead. That is 6,60,000 is for 2,20,000 units. I repeat again, 6,60,000 is for 2,20,000 units. So for 1,11,000 units, it will be 3,33,000. Another 9,60,000 is for 2,40,000 units. What if it is 1,27,000 units? Then it will be 5,08,000. 5,08,000. So cost of production, budgeted cost of production, we can say. Budgeted. Please copy the solution. The solution is ready for you. Let me check. I've got few answers. Very good, Saurav. Very good, Saurav. Sanjay, please check your answers. Answer once again. Your answer solution is incorrect there. Let's make the total cost also. I have got one answer. You guys write down the remaining part. The total cost will be 222 plus 38 lakh 10,000. 16 lakh 30,000. Thank you, question. Please copy the solution, guys. Very good, guys. Please copy the solution fast. So guys, this is all what about production budget. There are few questions in the study material also. Since the questions are, little less in the study material, that's why I have taken questions from out of study material. Hopefully now you are thorough with the concepts of production budget. Let's proceed further and start with the next part, that is master budget. Now see, what is master budget? When all the budgets are prepared, everything is done, we will prepare the master budget. Each and sales budget is ready, material budget is ready, labor budget is ready, overheads budget are ready, all the cash budget, everything is ready. After that, the last part is basically the master budget. So let's start with master budget. I have taken the question from the study material only. So I suggest you guys to read the question first carefully, because it's a very, very easy question. You can easily calculate it also. The question given as follows: float glass manufacturing company require you to prepare the master budget for the next year from the following information. You have been given sales of toughened glass and bent glass, that is 6 lakh and 2 lakh respectively. So the total sales will be 8 lakh. The direct material cost is 60% of sales. Since the this manufacturing is basically material oriented, because maximum cost is of material only. So the material cost is 60% of the sales. The wages are paid 20 workers 150 per month. So per month we generally pay 3,000 rupees, and for 12 months it will be 36,000 rupees. Indirect labor, work manager 500 per month. So 500 into 12, that is 6,000 will be the work manager salary. It will form part of factory overheads. Foreman again 400 per month. Stores and spares, again a variable cost 2.5% of the sale. Depreciation on machinery 12,600. Light and power 3,000 rupees. Repairs and maintenance 8,000 rupees. Other sundries Other sundries Other sundries are 10% of the direct wages. Admin, selling and distribution expenses are 36,000 per year. So this is a very easy part. This is a very easy part of this chapter. You guys have studied marginal costing in the last 2 sessions, or I mean many other chapters. So it's just simply a statement showing the profit. So nothing more than that. Sales minus all the total cost, that is material, labor, that is the total is the prime cost, minus all the factory overheads. First of all, you write all the variable factory overheads, then fixed factory overheads. You will get the work cost. Thereafter, you have to deduct admin, selling and distribution overheads. You will get the net profit. This is what we have to do in this question master budget. Let me check if you guys have any query in this question. No queries. Let me check the queries first. Thank you very much, Rakshana. Let's start with this master budget, guys. The last question. If we are left out with next 10-15 minutes, 5 minutes, we'll discuss the cash budget also. So let's start with master budget. Now the sales is given. There are 2 types of product, toughened glass and bent glass. Now we have direct material cost, direct wages cost. So let's start with we have the total sales now. Now, first of all, less cost of production. What is there in cost of production? The material cost. The material cost is 60% of total 8 lakh. So it will be 4,80,000. Direct wages. The data is given in the question that total 20 workers, 150 per month into 12 months, that is total 36,000. So this will be the prime cost. 48 lakh 36,000. Now next is all the fixed factory over. We will take all the fixed and all the variable factory overheads. Work manager salary, that is rupees 500 into 12, that is 6,000. Next is foreman salary, 4,800, 1,200 into 4, 4,800. Next is depreciation, 12,600, the another fixed cost depreciation, 12,600. Next is all the light and power. Assuming since light is given, alternatively we can take it as a variable cost also. The light and power, that is rupees 3,000. So the total fixed cost will be 6,000 plus 4,800 plus 12,600 plus 3,000. 26,400 will be the total fixed cost. Now variable overheads. 1 second, guys, 1 second. Now we'll calculate all the variable factory overheads also. The variable factory overheads, the first and the foremost thing, stores and spares. That is total 20,000. Repair and maintenance. Maintenance is rupees. Repairs and maintenance is rupees 8,000. Sundry expenses is given some percentage of sales, that is 10% of direct wages. So sundries, 10% of direct wages, that is 3,600. So the total variable cost will be 2,000 plus 8,000 plus 3,600, that is 13,600. So now we have got all the fixed factory overheads and the variable factory overheads and the prime cost. It will be what? The work cost, that is the factory cost or work cost. Work cost will be total 48,36,000 plus 26,400 plus 13,600. 48,76,000. We'll add admin, selling and distribution overheads. Admin, selling and distribution overheads. Admin and distribution cost. That is, it is in aggregate 36,000. So we will get total cost of production, that is 48,36,000, 48,76,000 plus 36,000, 49,12,000. So the sales we have, the cost of production we have, so we can easily get the profit. 30,80,000. Error of a zero. I like that. So net profit will be 2,08,000. I know I have to check the figures also. My material is 480, 36 is my wages, 6,000, 4,800, 12,600 is my depreciation, 1,000 is the light and power. It is sorry, 20,000, 8,000, 1,000. Hopefully the answer is correct. Let me recheck the figures also. Little tired now, guys. 6 lakh, 2 lakh. Thousand 800. Yes, guys, the answer is correct now. 1,90,000 was little tired now. Anyways, so this is all what about master budget, guys. Let me check if any of you guys have query. So this is all what about master budget. It is nothing like once the all the budgets are ready, the last budget you have to prepare is master budget. So this is the end of the chapter. In the given time frame, whatever the time that is allotted to this chapter, I tried my level best to make you guys understand the concept of flexible budget, the concept of production budget and master budget. There are few important points also, that is cash budget, which the examiner do ask sometime. It is covered in the financial management part, so you guys can refer the financial management. But in short, the cash budget is what? The management of cash, that is inflows minus outflows. That's it. Estimated inflows minus estimated outflows. Now, the time is running. 1 second, guys. Let me check if anyone has query. So friends, this was my last session of budgetary control. I have taught you few chapters. That is, process costing is there, joint byproduct costing is there, marginal costing, a very important chapter, standard costing again very important, budgetary control again also very important. I again request you guys to please solve the question by hand in writing. No need to do ticking, because many students, get lesser number of marks because they lose the confidence once the paper is there in front. Why? Because they have not practiced. So the only solution, the only way to clear all the paper is the practice, the hand practice. You have to write each and every solution with your hands. This is the only way to clear and crack the exams. So anyways guys, the time is running. Still I have got few queries, but still the time is running and I have limited time. That is, I have to finish off the lecture by 9:30. I love you all guys. Thanks for your kind support. I really love the way, the way you responded, to all the, everything. So thank you very much guys for your kind support and understanding the things, even asking queries. I'm really going to miss you guys and your queries. So thank you very much guys. Wish you good luck. God bless you guys. Take care guys. Hopefully see you soon. If the time is allocated, definitely I'll try my best to keep a query session for all the chapters I have discussed. But yes, I have to check with the institute also. So please take care guys. Thank you very much. Thank you very much. We'll miss you guys. Thank you guys. Take care.